The Securities and Exchange Commission, SEC, the watchdog of the U.S. financial markets, has recently instituted cease and desist proceedings against Icahn Enterprises L.P., IEP, a master limited partnership with a significant presence in the American business landscape. The proceedings are based on IEP's failure to disclose that its founder, Carl C. Icahn, had pledged IEP securities as collateral to secure personal margin loans. This non-disclosure occurred in IEP's Form 10-K for the fiscal years ended December 31, 2018, through December 31, 2020. As a result, IEP violated Section 13A of the Exchange Act and Rule 13A1 thereunder. The man at the center, Carl C. Icahn. Carl C. Icahn, the founder and controlling shareholder of IEP, is a well-known figure in the world of finance. He built his reputation as a corporate raider in the 1980s, making hostile takeover bids for companies and then restructuring them to increase shareholder value. Over the decades, Icahn has held significant influence over numerous corporations, often taking large stakes in companies and then agitating for strategic changes to boost the stock price. He is known for his aggressive tactics and no-holds-barred approach to corporate activism. As of December 31, 2023, Icahn and his wholly owned entities own approximately 86% of IEP's outstanding depositary units. Icahn's influence and control over IEP are significant, and his actions have a direct impact on the company's operations and disclosures. The charges: a failure to disclose. From at least December 31, 2018, through December 31, 2020, Icahn had margin loan agreements with various lenders. These agreements resulted in him pledging IEP depositary units and/or his interests in the IEP funds as collateral. The outstanding principal amounts of the individual loans ranged from $150 million to $1.7 billion. This is a substantial amount of money, and the fact that these pledges were not disclosed is a serious issue. IEP failed to disclose Icahn's collateral pledges in its Forms 10-K for at least the years ended December 31, 2018, through December 31, 2020. These forms are crucial for investors and the public to understand the financial health and risks associated with a company. By not disclosing this information, IEP violated Section 13A of the Exchange Act and Rule 13A1 thereunder. The violations: a breach of trust. Section 13A of the Exchange Act and Rule 13A1 require Exchange Act reporting companies to file with the Commission complete and accurate annual reports. These reports are a cornerstone of transparency in the financial markets, allowing investors to make informed decisions. By failing to disclose Icahn's collateral pledges, IEP violated these regulations, undermining the trust of its investors and the public. Here's how the SEC viewed the potential impact. In the case of Carl Icahn, he borrowed billions of dollars using his vast stock holdings as collateral. This allowed him to gain access to significant capital, which he could then use to fund his activist investment campaigns or other business ventures. However, the crux of the SEC's case against Icahn revolves around the disclosure, or lack thereof, of these stock pledges to the public and the potential impact on other investors. Other investors may have made investment decisions based on the assumption that Icahn had a long-term commitment to the companies in which he invested, without knowing that a significant portion of his holdings were pledged as collateral. If Icahn were to default on his loan, the lender could force the sale of the pledged stocks, leading to a sudden and significant change in the company's ownership structure. This could negatively impact the share price and affect all investors. Icahn's actions created an uneven playing field, as he had access to information, the extent of his stock pledges, that other investors did not, potentially giving him an unfair advantage in the market. The penalties: a price to pay. As a result of these violations, IEP is ordered to cease and desist from committing or causing any violations, and any future violations of Section 13A of the Exchange Act and Rule 13A1 thereunder. This means that IEP must ensure full compliance with these regulations in the future, or face further penalties. In addition to this, IEP is also ordered to pay a civil money penalty in the amount of $1,500,000 to the Securities and Exchange Commission, within 10 days of the entry of the SEC final order. This penalty is a significant financial consequence for IEP, and serves as a stark reminder of the importance of full and accurate disclosure in maintaining the integrity of the financial markets. The SEC's charges against Icahn Enterprises L.P. and Carl Icahn highlight the importance of transparency and full disclosure in the financial markets. The failure to disclose billions of dollars in stock pledges is a serious violation that undermines investor trust and market integrity. It is a stark reminder for all market participants of the importance of adhering to regulatory requirements and the potential consequences of failing to do so. What do you think about this situation? Do you believe Icahn will face the consequences of his actions, or do you think he'll come out unscathed? Drop your thoughts in the comments below. And hey, if you're interested in more on financial controversies, check out our upcoming videos where we discuss other high-profile cases that rock the investment world. Don't forget to like and subscribe for more updates.